Hi everyone, let's go over my bullish and bearish cycle, macro and high time frame Elliott Wave scenarios on Bitcoin. Starting with the bullish cycle scenario where we're looking for multiple 1-2s to the upside, where now we're looking for a bull market in a blue wave 1 followed by a bear market in blue 2 before then continuation to the upside. To get a better idea of the high of this blue wave 1, we have to first compare the previous wave 1s with one another. And you can see that the yellow wave 1 is a little bit shorter in time than the red wave 1, as the high over here was made just before the 786 fib time, taken from the low to the high of 1 to the low of this wave 2 to compare red 1 with yellow 1. The latest bull market, the green wave 1 here, was exactly the same amount of time as the yellow wave 1, as the all-time high was made on the green 1-to-1 fib time, taken from this low to the high to the low over here. Now if we then look at the blue wave 1, we can get a little bit of an estimation when we put the 786 and the 1-to-1 fib time on the chart, and just for a little bit of leeway, the 618 as well, with these fib times taken from the low to the high to the low over here, giving us an area between October 2025, March 2025 and September 2024. If we then look at the price for this potential wave 1, we also have to compare the previous wave 1s with one another. You can see that the yellow wave 1 is a little bit shorter in logarithmic Fibonacci terms when you take a trend-based fib from the low to the high to the low over here, as it reached around the 0.618. Same is true for the green wave 1, which again is shorter on the logarithmic chart compared to the yellow wave 1, as here price hit the 0.618. So keeping that in mind, of course the 0.618 is on my chart, giving us a target around 100k, but just again for a bit of leeway, I also put the 786 on the chart, giving us a target at 180k. If we then look at the bullish macro scenario here on the weekly chart, and this was the latest bull market to the upside where we made the all-time high at 69k, after which we then have a WXYXZ corrective structure in wave 2, which is a rare corrective structure, and then we're looking for a continuation to the upside in a bigger wave 3, which does mean that you really want to see volume following price to the upside. At the moment it's a bit weak, but what is not yet there might still come. If we look at this bullish scenario, then we are currently working on wave 1 of the bigger wave 3. Remember, we have wave 2 finished here, and we are now looking for a bigger wave 3 to the upside. In this bullish scenario, we are then looking for a impulse to the upside in a wave 1 and 2 that are finished. 3 is in, looking for a wave of 4 and then eventually a final wave 5 to finish wave 1 of 3, then look for a bigger correction in 2 and then continuation to the upside. The 0.382 was touched for this wave 2, which is a less common target for wave 2. It's more common for a wave B or a wave X. Wave 4 here, this is the most common target between the 302 and the 05, taken from the low to the high of 3, giving us a target between 37k and 39.9k, with the invalidation being the 0.618 at 34.1k. If price can move towards this 0.5, then the common target area for this wave 5 is between the 1.236 and the 1.618, between 52k and 56.5k. If price can make it towards around that 1.618, let's say 56.5k, then the common target area for this wave 2 is going to be between 36.1k and 27.2k. Now this scenario works very well with these volume profile levels over here. We have been in this range for a while in 2021, and I think the probabilities are very low to just push through this volume profile without at least spending some time in this range throughout this year. You can see that I counted this bullish scenario in such a way that it respects the range very nice, with wave 4 over here ending around that point of control, a sideways corrective structure that we like to see. Wave 5 then creates a deviation above the range, moving above over here, moving above 50k preferably as well, so that we can make sure there's some greed, some FOMO, people talking about the all-time high, before then a move back inside the range, traveling to the other side towards the low 30s. After that, we of course want to see continuation to the upside. Another thing that is quite interesting is that the golden pocket is also over here, taken from the high to the low, and if I toggle log chart on, then you can see that currently we are ranging on top of the golden pocket after rejecting at the value area high, where we also have the 786. If we then look at the cycle bearish scenario, then we are looking at a finished impulsive structure to the upside, the all-time high being the end of the red wave 1, and then we are looking for a bigger wave 2 to the downside with at least one more move down below 15.4k. Now for the target of this wave 2, it is important to have a look at the previous retracements, and you can see that this wave 2 over here was very shallow, also retracing to the 0.236, not hitting the 382, and that is also something that I expect in this scenario, where the 0.236 for me would be the maximum target around 6k. Don't really want to see price moving below this low here, which is around 3k, before then a reversal to the upside. Something that is common for wave 2 retracements is that the low of wave 2 is made after the 0.382 fib time taken from the low to the high, which is currently sitting on the 1st of September 2025. If we then go to the macro bearish scenario, then this is what we have to look for to then finish the red wave 2. 1, 2, 3, 4, 5 was the latest impulse to the upside to finish the red wave 1. And then we're looking for a wave A, B, and eventually a C to the downside, where now we are at very important levels for the high of this wave B, the golden pocket to the 786 area. Also, if I turn logarithmic scale off, then you can see we just hit the golden pocket and we still have the 786 at 57.8k. So this area in general between, let's say, 48 and 58k is very important resistance for price. After wave B is in, we are then looking for an impulse to the downside in a wave C, where this golden pocket is in beautiful confluence with the value area high of this multi-year volume profile. Golden pocket taken from the low to the all-time high, giving us a great support area between 11k and 8k. If we then zoom in to that yellow wave B, then we are looking for a zigzag to the upside in a wave A, B, and a wave C. Wave B retraced to the 0.382 Fibonacci taken from the low to the high of A, which is a common target for a wave B, while it is a less common target for a wave 2. So that does increase the probabilities a bit that this might be a wave C to the upside. Common target area for a wave C is where price is ranging at the moment. On the weekly time frame, we have not closed any candles above the 1.236, as you can see, and the 1.618 is also still a target at 50k. Now a wave C can extend to higher prices. Usually the 1.618 is the maximum price, but even if price would move above that level, we still have wave C potential. It all depends on what is forming on the lower time frames. You can also see a fib time on the chart taken from the low to the high of A to the low of B to compare wave A with wave C, and the most common target area for wave C in time is the 0.618 to the 1.618, so this at the moment works very nicely. But of course on the lower time frames we want to see weakness before we're going to talk about levels below 15.4k. And if we then look at the probabilities of the different scenarios, then on the cycle monthly time frame the probabilities at the moment are pretty much neutral, because it's such a high time frame. You really want to observe what happens locally on the lower time frames to get a better idea of the probabilities on the cycle time frame. On the macro, we are having probabilities from an Elliott Wave point of view that are slightly bearish, just because a WXYXZ corrective structure is very, very rare, more so on the higher time frames. On the high time frame, if we then look at this particular structure over here, then also here the probabilities are slightly bearish just because of the 382 bounce here, which is a common target for a wave B and a little less common for a wave 2. However, by all means, we first want to see local weakness in a bearish case, as also the bullish scenarios are still very, very much alive, and at the moment more locally here we don't yet have full clarity about are we going to follow the bullish or the bearish scenario, as we eventually still expect a bit of a retracement to the upside. We have to look what this retracement is, an impulsive structure for continuation or a corrective structure, and then if we do move to the downside we have to observe if this is a wave C or a wave 3 for much lower prices. So at the moment we just continue to observe the price action here with the daily updates, and let's see where price is going to be next week at 7 p.m. Central European time on the Sunday. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.